Good morning and Happy New Year, everybody. Thanks for joining us today as we kick off the year of 2020, a new year, a new decade, and looking forward to all that can happen this year in terms of giving you some commentary and things that are happening every single day that the market's open, minus a couple of vacations here and there. So, hey, hang tight. Dave will be with us here in just a few moments. Looking forward to our chat today.
Good morning and Happy New Year. It's 8:41 now, 19 before 9. We always try to check in on your money and see what's going on Wall Street about this time, give you a forward look at what the day could look like. We got Phillip Statler from the offices of Statler Financial Services back in the saddle for a new year. Phillip, good morning. How are you?
I'm doing great, Dave. Hey, Happy New Year to you and everybody out there. I hope everybody had a great and tremendous holiday and are ready to get going in 2020.
It is time to get going in 2020, and just kind of as a teaser, it looks like the markets are really revving up their engines. Start the morning out with the usual federal data dump for Thursday. I'm surprised they did it for January 2nd. I didn't know they'd get their poop in a group in time, but they did. First-time jobless claims, 222,000. That keeps us down in probably the lowest levels in close to half a century. They revised last week a little bit, so it was a 2,000 drop from last week, which still ain't bad. 222 is in that range of the normal sifting and winnowing. Was the market expecting anything different?
No, I was actually expecting a little bit more than that. So, they were expecting 225. It came in at 222. So, basically, I call that in line.
Oh yeah, we get down to the numbers these low when they get down to full employment numbers. I kind of look at it and say, anywhere between 200 and 230 is probably statistical wobble as much as anything. We do have some good news on the trade front, or maybe the rumor mill anyway. President Trump said he's got a date to potentially sign the China trade agreement, which has everybody in a tizzy this morning, doesn't it?
Well, I think so. I think it's a good thing that we're finally maybe going to put that first part behind us. But let's don't forget that that's the first part. There's more to come when it comes to China.
Exactly. We ended up caving a little bit and saying we didn't absolutely have to have a full comprehensive agreement, so we're doing it the way China wanted to, in phases. The good news is phase one includes an increase in Chinese agricultural purchases from our country, and that at the very least will give us a little bit of cushion for the sector of the economy that got whacked the worst as we were going through our trade war with them.
Well, that's right. And let's face it, the Midwest, those farmers and those people in ag, they needed some help because they were getting beat up pretty bad, the soybeans in that area. So that should help them. Again, there was no exact numbers, at least that we saw, but it was a substantial increase over what they purchased before.
Absolutely. I'm an old farm boy, so I was tracking the corn futures over this past week, and the price on corn is down close to the point where it was when we went through a period of time where farms were going out of business right and left. So things are not looking great. So an increase in demand is a good thing at the moment because that'll boost prices for agricultural products. China is going to increase their economic activity. They don't do the interest rate shuffle like our Fed does. They just tell their banks they don't need to keep as much in reserve, and they put some stimulus moves on as well overnight.
Yes, they did. You're right. They work on a reserve system, and that's how they kind of regulate their money supply. And so what they did is they lowered the amount that banks have to keep in reserve by 0.5%. And that equated to some crazy number in the billions of dollars. $115 billion is what that injects into the economy there.
And that sounds like a running ton of money, and it is. Yeah, in the scope of China's economy and with the number of people they've got over there, it's probably a drop in the bucket, but any additional liquidity in China can't hurt the international trade situation one tiny little bit, can it?
Well, that's true. I mean, they need, in the world scale of things, all of this is going to be a big deal.
Oh, without a doubt, especially given the fact that we got some neighbors over on the Atlantic side of the pond that could use some stimulus because European manufacturing is not looking as good as we'd hoped, is it?
No, it's not. And now, don't get me wrong. It did come in better than what was expected for the month by about 1%. However, it's the lowest it's been since 2012. And we're talking about the European manufacturing number. And so, it's just not getting where it needs to be. It's a 7-year low. And let's face it, manufacturing is the core to a lot of our economies. And so
Oh,
that's a big deal.
absolutely. Let's keep in mind that 2012 was kind of while we were still plumbing the depths of the Great Recession as well. We really hadn't recovered much at all by then, had we?
No, we really hadn't. We were working our way back up.
Not exactly. So we've got 2 or 3 bits of good news and 1 bit of bad news today, and it looks like the market is kind of having party time off of it. Phillip, I did a little bit of math while I was marking time on New Year's Day, and I thought it was interesting enough to get it in while we got our usual weekday folks in. Year-to-date, 2019 full-year numbers. Dow Jones Industrial Average was up 22.34% for the year. Standard & Poor's 28.8% for the year. NASDAQ up 35.2% for the year. Whole bunch of stockbrokers are sending out 401k statements with big red bows on them. But you and I have always had kind of a little bit more reticent view on that because we were in the middle of a correction on the first of the year of 2019. And it wasn't a bad year, but actually when you look at the notion, I did a little measuring from the peak of the market in September, right before we entered that correction. Turned out to be a decent year, but the Dow was only up from that peak in September till the end of 2019, 6.7%, which you could honestly say was an off year for the Dow's growth rate. NASDAQ is up 10.3%, or I'm sorry, the S&P was up 10.3% from September through 12/31, and the NASDAQ was up 11.5% from September 16th of 2018 through 12/31 of 19. That kind of averages out to a pretty much normal year on the markets when you take all 3 indexes, doesn't it?
Yeah, I mean, don't get us wrong. Those are not bad numbers at all. But
No,
it's
not,
like you and I have been talking the whole time, right? That the year-to-date numbers do not reflect the market as a whole because of that big downturn in the fourth quarter of last year. And so those numbers you just spouted off are really and truly the reason why we said that. Because don't get us wrong, the market was good. It had a good year, but not as good as what everybody wants you to believe. Best market in all this time. Well, it's the best market because it took this big dip in the fourth quarter last year.
Yeah, I mean, we started out in the toilet, so yeah, we came up and had a good year overall. But they say that the average growth of the market is 8-9% a year. Well, you take those 3 indexes together, we did 8 or 9% worth of growth for the year, and that ain't bad by any measure. But let's always look at it with a little askance at the fact that we were in the toilet on the 1st of January of 2019.
Exactly. Hey, Dave, we didn't talk about this before we went on there, but I did want to give a little perspective. This is the first day you and I are talking together for 2020. And so I think people need to take a time and remember a couple things. Numbers change, right? The amount you can put in your 401k has changed. The amount you can put into an IRA has changed. The amount you can put in your simple plan has changed. And so we need to take inventory and make some changes there, right? If you can max out your 401k, right, you can put an extra $500 in there, more than what you could last year. And if you're over 50, man, you can put $26,000 into your 401k now if you're able. I mean, that's a good way to put some money away. And same thing with IRAs, right? We get a $500 bump this year. So now we can put $6,000 a year into our IRA. If you're over 50, you can put $7,000 a year in. So there's some numbers there that folks need to take a look at and need to make some adjustments to their savings plan.
Absolutely. And in most circumstances, advisors will almost all agree, most of the time, taking pre-tax earnings and putting into your retirement can only be good news for years down the road.
Well, that's true. But let me put a little caveat in there because I'm not on that train, right? So we are right now in the lowest tax brackets you and I will probably ever see, Dave. And so right now, it really makes sense, especially if you are in a 12% tax bracket, to don't take a deduction. Put it into a Roth. If you have a Roth 401k, use the Roth part. If you have Roth IRAs, put it in a Roth IRA. Let's take advantage of this 12% because let's face it, with the debt we have and the issues we have going forward, tax rates are going to have to go up eventually. put money away tax free and use the Roth provisions.
And that is a valid outlook as well. I think you'd probably agree. There are different scenarios and different situations for everybody, though, and that's why a person wants to go to an independent advisor that can look at the individual situation and advise accordingly.
Well, that, and you want somebody that has some tax basis, right? I mean, because taxes play a big role when it comes to retirement.
Absolutely. That's why we lose you for a few days every once in a while to stay absolutely current on all of the good advice and all of the good technology and information that comes with tax planning, right?
Exactly. You know, that's why we spend at least a week a year in continuing education when it comes to taxes and how taxes can affect our clients.
Understood. So let's reset the table for the morning. As we mentioned, the 31st was not a bad day. It was up modestly, 0.27% on the Dow, 0.30% on the Nasdaq, and 0.29% on the S&P. Closed at solid levels, but short of the all-time record after some profit taking on the 30th of the month. 45 minutes before the first trading day of the year, Phillip, it looks like party time out there. What we looking at so far?
It is party time, Dave. Hey, we've got everything in green ink. We've got the Dow up 0.6%, the S&P 500 up 0.6%, Nasdaq up almost 0.9%. So everything's going gangbusters there. Let's switch to the commodity side. We've got gold and silver both up. Gold's up about 0.5%. Silver, a big bounce, up 21 cents an ounce right now. That's 1.2%. To over $18 an ounce. And then we got crude oil at $61.11 a barrel, up just a tad.
And that's about where it was yesterday morning when I checked the close on the 31st. So it's not a major change, but staying over 61 is not what you and I would consider good news at the gas pump, right?
Exactly. You know, we'd like to see it down there in the 50s somewhere.
That would feel better. Overseas markets, Asia for the most part was up. Japan had an off day at the close early this morning. They have a tendency to go their own way at times. Europe is generally responding to the trade tension reduction with a party day of their own. England and Germany both up by almost a full percent midway through their day. Somebody need advice to stabilize, retire, and be happy with your nest egg. Phillip, that takes an independent advisor like we were saying. How do I find you to get an appointment?
David, give us a call at 863-382-0037. Now's a great time to schedule your financial x-ray as we head into 2020 to make sure you're on the right track and not taking too much risk. Join us every weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturdays, 10 a.m. Sunday mornings on News Talk 730 a.m.
All righty, and back here tomorrow morning on Light. Phillip, again, Happy New Year. Thank you much, and you have a wonderful day, all right?
Thanks, Dave. You have a happy new year. I look forward to speaking to you again tomorrow morning.
Thank you much. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Folks, again, I want to thank you for joining us today. I hope that you got something out of our show. I look forward to speaking to you again tomorrow. Have a happy new year and a great 2020 as we head into this new year and new decade.